Good morning, YouTube. Bennett, tradinganalysis.com. Happy Wednesday, August 4th to you guys. Thank you for tuning in this morning. Thanks for joining us. Hope everybody's doing well. Just taking a look at futures, bottom left-hand corner of your screen. We saw continued selling into yesterday's low. We've seen a fairly decent response from yesterday's support early in the morning, about 30-40 minutes into the open. We did find support in reverse in the indexes. The resistance cluster in the NASDAQ and the S&P 500 that we discussed last Wednesday continues to be respected. That's a zone that we're still tracking that we need to get through before our additional upside fib projections come into play. So we're going to get to that in just a minute. We've also seen earnings continue. We had a report last Thursday from Amazon. Earnings per share came in better than expected. Sales were a miss, 113 billion versus I think the average analyst expectations of around 115 billion. Certainly have seen some interesting price action in Amazon. There is an overall wave structure that perhaps suggests the most recent high in Amazon was actually a B wave. So we'll talk about all of that in just a moment. But before we do so, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Good morning, everybody. Hope you're having a great summer watching the Summer Olympics. Lots of exciting events. Been really enjoying when I have time away from the markets to catch up on things.
Gotta love DVRs. It's nice to be able to, I mean, it's always fun to watch it as it's unfolding, but being able to go back and at least review it certainly helps. Hey, good morning, Alex.
It's like 14 hours later for us, right?
Yeah, you're already...
The problem is if you get on your phone and you look on any... You get spoilers if you read any articles.
Oh, absolutely, yeah.
Who actually won. Because we get a tape delayed broadcast of all the events. So, yeah.
Yep. Either way, even if you're watching local or, you don't have to be watching national news. You could be watching local news and still get the spoilers. So, hey, did you see the sharing of the gold, Alex or Terry? Either of you guys see that in the in the men's event?
In the high jump, Alex.
Yeah.
Yeah.
I thought that was pretty cool. It was a class act.
Yeah, I mean, the guy from Italy, I think it was his last Olympic and the last chance, and this guy from actually jumping for Qatar was generous enough because it was his call. Is he going to share the gold medal? So he did share it. So it was really a nice scene.
I loved when he turned to the ref or whatever, and he says, "Can you get us 2 golds?" And that was neat. So.
Yeah.
It's been fun. It's been fun. Markets have been obviously of interest recently. We've got Bitcoin. Bitcoin did make a rather sizable move. We've seen a pretty decent pullback from the 40K plus highs. Alex will be in to talk about that. Anything else you guys can think of? Any pressing events or anything at work?
Well, not much. I mean, we have seen the Fed last week. NFP is this week, so we're going to have a new jobs report. So
ADP this morning and NFP Friday.
Yeah, so lots of side comments from the members of the board. I've read a couple of them. So the members of the committee is shouting out a possible tapering if they see next 2 or 3 jobs report to be good. So more or less the same narrative. If the jobs reports goes good, they will start to taper. And I found this Fed meeting, last one, pretty nervous from Jerome Powell. I didn't saw him so nervous in the body language long time ago. And some of the news guys recognized that and asked him. So it was kind of, I think that they are worried.
Everybody was hanging on his words with bated breath. They really were. Yeah. So
we will see.
It's been an interesting summer, that's for sure. All right, I'm going to take you guys through the charts really quickly. We'll take a look at the resistance in the indexes. After that, we'll be in with sector focus from Terry, and we'll head into some macro. All right, sounds good, boys. I'll be back on the other side. See you guys in just a few. Good morning once again, traders and investors. Let's jump into it. Hard right edge of the Motive Wave platform. Taking a look at the current progression that we've seen thus far in the indexes, really since the consolidation breakout going back to February. So February 12th, you can see the NASDAQ 100 did establish a high. We then enter a period of consolidation that can be counted in a couple of different ways. But what's really awesome about the overall, the variations between the different valid Elliott wave interpretations is they both imply a very similar price, fib price zone. So I wouldn't get too hung up on some of the subdivisions of some of the corrective patterns that we've seen, just simply given the subjectivity of some of the counts from the COVID lows. We've seen some really mixed sentiments. We've had a lot of headline events that have resulted in sizable corrections. And so our approach, and this was something that Todd mentioned several months back, it's like, hey guys, even with the subjectivity of the count from the COVID lows, we continue to see the trend establishing moves on the upside of the market. And for that reason, we continue to remain constructive and long until we have a very good reason to go against this trend. So let's take a look at it. We're on the 195-minute half-day chart. Bottom left-hand corner of your screen, you can see the March 2020 COVID low. I'm still tracking an interpretation that would pair this entire sequence up as a wave one of the same degree, meaning we do have the possibility of a correction into the end of the year. Alternatively, and I mentioned this a few weeks back, if we get into this fib cluster and we just keep moving on the upside, we do have an alternate interpretation that would essentially put this correction back here in August through September or October as primary degree orange waves 1 and 2. And if that's the case, we're actually in a much more significant breakout than many are anticipating. And I think it's a count that not many Elliotticians are even considering. So let's jump into it. Let's dive down off the 195 to the 1 hour and talk about price action from the May 18th low. So taking a look at where we've been following last week. In fact, we're going to go from the 1 hour. We're now just going to dive right on into price action from July 13th on. So from the 1 hour, I'm going to take you all the way down to a 15-minute chart. You can see that yellow circle for context. So in the NASDAQ 100, we've had a fairly decent directional move off of the top. Last week, following this move, we identified a simple 61 to 78.6% Fibonacci retracement. That we identified as the most logical zone of resistance on the way back up. And you'll notice that the NASDAQ 100 has truly yet to break through the 78.6% fib retracement of the July 26th through 27th decline. For that reason, we see one of two possibilities. Possibility number one is that we're simply in a sideways Elliott wave triangle, lower highs, higher lows, typical contracting price action. If this is the case, thus far, other than the seemingly directional move off of the top, we do have three wave subdivisions that are appropriate. So you can see the July 29th B wave high in this instance resulted in a measured move, three wave decline, as evident by the C versus A 100% fib level here. We didn't actually quite get there, but what's really rather interesting about this C wave is another key Fibonacci level within this consolidation is the alternating 61% relationship to the A wave. So we often find in contracting triangles, you will see alternating 61.8% relationships. Said otherwise, for those of you who don't have Motive Wave, if you take your fib projection or extension tool in TradingView, it's called the trend-based fib extension. If you measure the magnitude of the A wave decline, which in TradingView you would click once here, Your second click would be at the bottom or the low, and then your third click would be where you want to project that measurement. Well, if you were to take an A wave measurement and project it from the B wave high, you'll see that 61% at 14,872.59. So 3 waves down, we're now looking at resistance up into 15,052. Wave count invalidation on this triangulation would be a move over 15,091. Now, I mentioned I'm counting this in one of 2 ways. The alternate view of this consolidation is in fact, and we're going to go right back down to a 15-minute chart. The alternate view of this consolidation says, hey, look, you have a directional motive wave off of the top, meaning 5 waves down. Given that that's a 5-wave structure, perhaps triangulation is not the count that's at play, but in fact what you're seeing is simply a directional move lower in A, an expanded 3-wave counter trend progression in B, and then we'll see a secondary decline in C that's somewhere between 61% and 100% of the initial A wave decline. This view shows down in A, and the price action that we've seen thus far from those lows is simply the expanded blue B wave. This still encompasses the 61 and 78% retracement resistance and essentially describes price action from the 27th as counter trend and corrective. 3 waves up in A. The 3-wave move down in B would occupy B of a wave B flat, and now we see a C wave rally. So this also explains the impulsive price action that we saw following yesterday morning's opening low. So watching futures, I do see futures moving lower this morning. The idea that this was a directional A wave, 3 waves back in B, and we still have a secondary decline in C is one that we're tracking, and one that I feel, should it unfold, will present a fantastic tradable entry opportunity, so tradable lows. If we start breaking lower, look for support between 4v2 equality at 14,850 and the 38% retracement of wave 3 that comes in at 14,480. Notice that would take you essentially to the area of the previous 4th of 1 lesser degree. Very typical 4th wave support zones. So that's the NASDAQ. Looking at futures this morning, you can see here we do, bottom left-hand corner of your screen, we do have the S&P futures moving lower. Let's keep our eyes on that resistance. It's very important. Okay, now back to the Motive Wave platform. Let's go ahead and take a look at the S&P's price action and resistance as well. So taking a look at the S&P 500, we are still tracking the structure that says this is all part of an initial wave 1 from the March COVID lows, and that's fine. I'm going to continue to track this as my preferred interpretation, being a little more cautious on the upside here, but still bullish longer term. So this essentially still gives us that possibility of a correction, and we're not discounting that yet until we just break through that upside cluster. But in the S&P, let's get off of the daily and let's get down to the smaller time frames, and let's talk about that resistance cluster that we mentioned last week. So last week, we noted the fact that here in the S&P, and we're actually looking at a 10-minute chart with the top left-hand corner of your screen being the July 27th high. We noted last Wednesday that in the S&P 500, we actually had a spot-on measured move decline. So this was a 3-wave structure. It unfolded, as you can see here, in 7 major price swings, 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, which is indicative of a corrective 3-wave structure. What's really fascinating about this in the S&P is, unlike the NASDAQ 100, the S&P 500 did manage to retrace through its previous high and establish a new high. But look how the S&P got there. We did so in, yet again, a 3-wave measured move. So we have 3 waves off the top into the 27th, 3 waves back into the 29th, and guess what? 3 waves lower into yesterday's low. All we've seen are a series of 3 waves moves. Could this be ABCW, ABCX, ABCY, we're done and we just continue on the upside? Sure. And that's a possibility that we are tracking with our members, and one that we are aware of. But before we can start trading that upside move, once again, we need to get through this resistance cluster. The resistance in the S&P is now 44.30 up to 44.45. If that zone holds, we could see a secondary decline just as we looked at in the NASDAQ 100. So that's it for me. I'm still bullish longer term on the upside. I still see this as a counter trend progression, and I do think this is going to present tradable lows and continuation in the indexes. Let's take a look at Russell 2000 small caps. Taking a look at Russell 2000 small caps, we're all the way down on a 20-minute chart. Bottom left-hand corner of your screen, you have the July 19th low. You have a move up in one, 3 waves down, 3 waves back, and now we have either a completed 3-wave structure or perhaps we are doing the exact same thing here. We're going to see a further secondary decline and see of wave 2. Resistance in small caps, 22.55. That is a 61% retracement of the most recent decline. So that's your resistance cluster in small caps. And then over to the SMH, if you've been following semis have seen an incredible breakout as of recent. We're looking at a 20-minute chart, bottom left-hand corner of your screen being the May 12th low. We've had 5 waves up into the June 30th high, 3 waves lower into the July 19th low, and we can now count 1, 2 inside of blue intermediate wave 3, and perhaps are just about to see wave 2 of orange 3, which means the move that you've seen in semis could still be gearing up and is one to definitely not miss. So we'll continue to track that. That is it for me this morning. Keep your eyes on those levels in the NASDAQ. Once again, just to reiterate that point, 15,065. We need to get through that in the NASDAQ 100. Over to the S&P 500, your key levels here are going to be 44.30 and 44.45. That's it for me. Back over to the team. So what do you guys think?
Bennett? I mean, after that, who doesn't have a better appreciation for Elliott and Fitt? I tell you, those guys, those mathematicians, back in the 11th century, right?
Yeah.
That's where Fibonacci came in, had the challenge from the king, figure out how many rabbits would there be in after a month if you had a mating pair make 2 a day or whatever. And he had to come up with this series, and this series matches fundamentally what happens throughout nature in its fractal form. And it's just a beautiful thing when we see it apply to the human factor that's done in the trading markets.
Yep, it really is.
On top of that, R.N. Elliott's work that he did back in the 30s. There were no computers back in the 30s, guys. Everything he did was pencil and paper and telegraph, right? They would read the ticker. His wife would read the ticker off to him, and he would plot this thing. And from all of that laborious work, he was able to develop such a great theory that we're using today on supercomputers, right? I mean, the phone that you're walking around with you today is a supercomputer. So we're privileged to be using this service, and hope you guys really appreciate the effort. We make it look easy, but there's a lot to interpreting what you see so that you get your best conviction for your trade. So thank you, Bennett. Great narrative.
Thanks, Terry. I appreciate it. And yeah, most definitely. I couldn't imagine back in his day, not only working all of the charts by hand, but working all of his calculations by hand. A lot of discipline that clearly went into that, and we're greatly appreciative of R.N. Elliott's work. And as Terry said, we continue to use it today. It lives on. So, all right, Mr. Terry Long, sir. Looks like we have your screen share ready to go. And we're good to go. You ready to jump into it?
Let's go.
All right, here we go. Sector focus.
Hello, traders. I'm Terry Long at tradinganalysis.com here with your weekly sector focus. We're in the middle of summer. Summer trading has been anything but boring. Second quarter earnings season is also in high gear midway through, with more to come as the markets absorb these earnings news. Let's look at last week's performance here of the index and sectors. Following a dramatic rebound and move to set another new all-time high, the S&P pulled back slightly just to end the week 0.37% lower. Quarterly earnings announcements resulted in gains in some sectors and losses in others. Overall, value plays were mostly up on the week, rebounding from underperformance that they have seen in several weeks. Now, the NDX did dig a little bit deeper than the S&P, declining from its all-time high about 1% last week, but both indexes still running well above their 20-day simple moving average. The materials sector saw the biggest recovery last week, rising 2.8%. The energy sector saw a 1.79% rise. Consumer discretionary last week was the biggest loser, declining 1.5% as Amazon earning mist was digested by the market. Now, Monday's market here was fairly quiet. Tuesday did see the S&P set another all-time high daily close, setting in at 44.23, just a tad over that previous all-time high. And we're currently sitting up 0.63% for the week. Now, the tech-heavy NASDAQ finished higher on Monday. And, well, I guess not. Maybe I've got that reversed. But it finished higher here on Tuesday, up 0.68% for the week. So far, semiconductors, like Bennett was saying, staging a bit of a rally. Getting off to an early lead this week, though, is the healthcare sector here. You can see up 1.5%, followed by utilities, financials, and there's consumer discretionary rebounding 1% this week. Energy sector up 0.95. The communication sector did not really participate in the rally yesterday, and it's down 0.68% so far this week. Materials is also off to a weak start. As for sector leadership, real estate, communications, and technology? Yes, real estate, communications, and technology are our top leaders now in terms of relative strength ratio. And the healthcare sector is now pushing itself over here into the leading quadrant. Energy and financials continue to push deeper down into the weakening quadrant. Industrials, materials, utilities, and now even staples are pushing down into the lagging quadrant. The staples sector had been moving lower steadily over the last couple of weeks. It had actually been doing fairly well up until you can see this hook to the south formed back on week of July 23rd there. And ever since, we've been seeing decaying performance. Now, at the same time we've been seeing that, we've actually been seeing the consumer discretionary sector rise back out of the lagging quadrant. And despite Amazon's earnings effects there, we are still seeing consumer discretionary rise higher into the improving quadrant. And like I said here, the healthcare had pushed out of the improving quadrant. We were curious last week whether we were going to see a continued degradation in momentum, but apparently the buyers have jumped right back in, and we have a new, whoops, get that back over here. We have a new push to the right, meaning we are gaining relative strength now. I want to jump in here real quick and take a look at the tech sector. It was modestly higher last week, but semiconductor AMD seen here, it was in the improving quadrant. Let's jump this over here. Let's go ahead and show you the RRG for the top 30 stocks in the in the technology sector. So what I was looking at last week, Oracle, Apple, Autodesk, ServiceNow, and AMD all showing improving vectors here with the blue. That's what the blue means. Their trend is improving. And with northeasterly headings means they are gaining both momentum and relative strength. So institutional investors, institutional money flowing back into these stocks, and now we actually are seeing these stocks continue to push higher. AMD is now actually breached over into the leading quadrant, and its vector is turned to green, meaning that's a leading trend now. So it's joined the likes of NVIDIA, Adobe, and Intuit, which were the market leaders here in this technology sector. Adobe's a software play. NVIDIA, AMD are semiconductors. ServiceNow is software. So is Autodesk. That's where AutoCAD comes from for all of you engineers out there. We do have KLAC rising up out of the lagging quadrant. It's got an improving trend forming with a nice northeasterly vector. So if this is our leaders, this is the secondary set of leaders. Here's some more. You can see more and more of these stocks rising out of that performance, or right underperformance. This is the XLK looking back, since early in this year. Here's March. Here's a decline that we had in March. We had a rally. We had another decline in May. And basically since May, the XLK has been in an uptrend. And Bennett does a better job with motive wave going ahead and dissecting the Elliott wave move, so I won't do that for you here, but I can tell you that looking inside of here, I really just see this more as a corrective area, and this more sideways performance here is possibly the first leg of another upthrust, even if we say we have a larger degree correction in some kind of flat formation. I just don't see this as any kind of major sell-off in technology. We're rising prices running currently above the 20-day. The 20 is above the 50 ever since here, and the 50 way back there above the 200. That just means long-term we have a solid uptrend in place. Real quickly, shoot you over here to look just at the semiconductors. Several of the names here are repeated, but that you see from just the technology sector. But look here, AMD, Xilinx, we got CDNS. Here's another one I like, ST Microelectronics. I was looking at this yesterday, sharing this with Bennett and saying, I think we've got some kind of triangulation complete here. We've seen a breakout now. We're breaking to the upside here. This is all-time high overhead resistance, the next target that we'll need to take out. So an uptrend is certainly in play. A lot of these semiconductors are definitely on their way back. Collectively, you can see lots of northerly movements, even these ones that still have lagging trends moving in the northeasterly vector. These lagging trends are going to start to improve dramatically. Is there anything else you'd like me to look at, Bennett? Otherwise, I'll hand it back to you now.
That's it, Terry. Appreciate it. Thank you so much. Yeah, I definitely agree with you on the XLK. I would not look at that as the start of an impulsive decline to the downside. And as you mentioned, even if we do see that secondary move lower, in viewing it as some sort of a flat, that still implies continuation on the upside. So that is it for Terry and I. Mr. Alex, sir, how are you doing this morning? You ready to rock?
Yeah, let's go.
All right, let's hit it. Here we go.
Okay, guys, so let's look a little bit of macro. Everything is, as you know, kind of revolving around this 10-year yields. This support is still holding. I'm juggling between several wave counts, definitely Friday, NFP report. But we are seeing that rates are constantly moving lower. There is a couple of reasons for that. And just kind of a basic, on the surface one is a little bit more spread of a Delta variant and the lockdown. So as I said, and basically that everybody knows that the coming September, October, November will be a problematic for renewal of the COVID infection, unfortunately. So the bond market usually gets its right, so they are actually buying bonds in a heightened risk, and the yields are moving lower. And I'm prepared to flip even this as a finished ABC, and if we start to make a 5-wave move to the downside, that will mean that this is all what we have seen from the 10-year yield moving higher. On the other front, in Germany, looking a little bit European thing, the same picture. This is the price instead of yields, but they work inverted, so just invert this picture. I use it because it gives a little bit more clearance regarding the wave count. So we are still pushing higher, which means that the yields are moving lower. And I think that longer term German yields are below zero already. So same thing as we said the last week. Here the things are trapped in some sideways consolidation. So we might get a little bit more back and forth in the year and a half, and then basically break out for a potential deflationary scenario. As we go to the dollar, dollar is moving lower as expected from the last week review. We have identified this whole move as a 5-wave move with a small truncation, and then from there we looked for a 5-wave move up to these resistance levels, and now we are forming potentially a wave A, because slowly we are forming a 5-wave move to the downside, which means that after a pullback, most likely we can expect another move down in a C wave, and then a probable continuation to the upside in this ABC pullback for now. So dollar index is working according to this script, and we're going to monitor that in this kind of a wave pattern that we see. So this projects the dollar to go higher until November, December of 2021, and then we will see from there. Okay, let's go one wave at a time. If we look some other macro stuff, we can also look gold. Gold is not doing much. This is the euro dollar. Same thing, just invert dollar index. So ABC pullback before we go a little bit lower. Gold has not much done in the last week. As you can see, a very small, very feeble, very weak move on the upside. So still a sideways consolidation in respect of the Elliott wave. Pattern recognition, still we can handle this in a couple of ways, but this can still be this X wave triangle, and we go lower. So I don't see anything bullish here, guys, especially with such a projection with the dollar index. Maybe a little bit of a pullback, and then until the end of the year, I still see a move lower, either in some type of a triangle or an X wave in a triangle. This is where Elliott wave methodology offers you a couple of solutions, and you are in the situation that you can still don't have enough of the market data that you can clearly recognize and kind of narrow it to at least one or two for behind you can stand. So for now, it's just moving sideways without any clues, keeping these support levels. Basically, if you see from the last year, November, we are basically, if we average the price, we are moving in a sideways market, okay? So average price for this range is around 1,800. So we are just trading sideways. So not much of a news there. I see that many people are interested in gold regarding this inflationary situation. But up to now, we still don't see market kind of takes this inflationary narrative and reflects it into a gold price on the upside. Traditionally, gold is inflation hedge, but I think just above 3%, we are still not there. So I think we're going to go a little bit higher, maybe, or sideways, and then finish the year or in the range between 1,500, 1,600, down to this previous area of the lesser degree wave 4. So in a crypto markets, Bitcoin is still kind of a challenging this 200 moving average. If you look, the previous 200 moving average hold, it reacts pretty nice. Once it's passed, it gives it bullish kind of a boost. Once you go and starts to act as a resistance, that's very visible here. We had the small overshoot here, but then we went down. And then when we crossed, we had a nice move on the upside. And again, we are facing a potential move down. So I'm still keeping this 2 wave counts because we moved to neutral stance. 5 waves up, this also can be a completed flat. So we are looking what is going on there. And for now, I'm waiting to see if this move down will actually transform into a 5-wave move. And if we see that, I think we can actually nail this possibility that we are going to go to a 20K, 18, 20, 22K, where we have this wave 4 labeled October, November, December this year. So we are watching very carefully this, what is going on. If we see some test of this 200 moving average, and then some sizable breakout and retest of the upper boundary of this 200 MA, we might actually think that this was some type of a reversal signature and that we're going to continue higher. So market is bouncing back and forth. We have also, I think, today an Ethereum upgrade. So we will see what that will actually do for the Ether price. Bitcoin Ether is looking in a favor of Ether. We have this as a triangle wave count. So it looks like we are going further on the upside after this triangle in some type of triangulation and break of this impulsive sideways triangulation in impulsive manner. So it seems that as we also look the Bitcoin dominance chart, the Bitcoin or altcoins will go a little bit higher, and then Bitcoin will join. So that's basically all. If you want to see what's going on of all other cryptos we track, join me tomorrow for a crypto lab where we do a review of the latest developments on technicals and also fundamentals in cryptos. So back to you, Bennett.
Thank you, Alex. Much appreciated. Yeah, definitely check that show out tomorrow morning, 9 a.m. Eastern on our Trading Analysis YouTube, youtube.com/trading analysis. He does an excellent job with that show. And as mentioned, not only technical, but he also dives into some fundamentals as well in the world of digital currencies. Yeah, taking a look at that Bitcoin chart there, Alex. I'm still looking at that 18 to 20K region like you are. I think that's the money spot in terms of longer term fib support. So looking forward to hopefully getting there.
Yeah, I mean, it's a kind of from the Elliott wave perspective, the most logical solution that this is some type of a flat. But I mean, with this market, you have to be cautious. I must tell you that also I've seen some of the cryptos very close to potential lows from the Elliott wave perspective. So I would say that the picture is very starts to be very kind of differentiate between the alts and the Bitcoin a little bit more. So I think that will be more and more in future because these sizable projects in a DeFi finance are starting to, and if we get lower rates, they're going to start to kick in on the upside big time. So
yeah, absolutely. It is going to get interesting, I think, over the next few years. All right. Sorry, I had a question there in the background that I got a little distracted on. I do apologize. All right. Oh, sure. So that covers it. Yeah, I'm curious to see how the some of the central banks looking towards digital currencies, how that all factors in as things progress. But one last chart I want to drop on is Amazon. I did forget to cover that earlier. So really quickly in Amazon, make note of the fact, and the markets are open here. Make note of the fact that top left-hand corner of your screen, September 2nd high, we established a high in Amazon. Price action consolidated into March 5th. We then see a 5-wave structure up, 3 waves back, and a very sharp B-wave retracement, which was 61%, go figure. And then we now have another 5-wave move up, which took you into the 1272 external retracement of this wave 4 decline. That tells us now, given the move of the size of the move off the top here, that this entire rally back, this 3-wave structure, which by the way, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 swings, 3-wave structure, measured move into the 1272, that may just be a B wave. If that's the case, Amazon could revisit 3,000, if not sub 3,000. If this ends up being the count for Amazon, it's going to present a great longer-term entry. We are still watching a count here that says, okay, maybe wave 4 ended March 4th. This is 1 and 2, and this is a smaller 1, 2. Here's the problem with this count. In the world of Elliott wave, this is now a degree violation, and it's not just a degree violation in price or a degree violation in time. It's both price and time, and that's an extreme no-no when it comes to the fractal nature of Elliott. So we wouldn't expect a smaller degree wave 2 to be both a larger retracement and longer in time than its higher degree counterpart. So that leads me to believe, along with additional analysis that we are doing on the RRG, that Amazon could be in consolidation here for some time. So going to keep our eyes on that. If you are interested more in what we do, check us out, tradinganalysis.com. And again, tomorrow morning, 9 a.m. Eastern on our TA YouTube channel. Alex has his live stream show. That's it. Excellent job, team. Thank you guys for tuning in. Please give it a thumbs up and subscribe. Turn on notifications if you did enjoy the content. Helps us get it distributed appropriately given the Google algorithms. And of course, we would encourage you to subscribe to the Trading Analysis YouTube channel as well. All right, Terry, Alex, anything else you can think of before we send them on their way? All right, good show.
Guys. Have a great rest of the week.
Good show, Alex. Yeah. Thank you, brother. Appreciate it. And members, we'll see you in just under half an hour. All right, sounds good, YouTube. I appreciate it. Thanks for tuning in. We'll catch you guys next week.
Bye-bye,
Take care.
Guys.
In the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients at Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at tradinganalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live.